Hi, teammates. Welcome to the Live Well podcast, the podcast that connects you to all the topics to meet you along your well-being journey. I'm one of your hosts, Jen Collings.
I'm Cindy Patterson.
And I'm Seth Christopher. Welcome to the Well.
Hello, everyone. It is another edition of The Well, our special edition this month. We are all about open enrollment, and we have Cindy with us here to talk about the financial aspects. Seth, good morning. Cindy, good morning.
Hi, how are you guys?
Good morning.
I'm excited to have everyone here to talk about this this topic. Cindy, give us kind of a summary of what we're going to discuss today.
Well, we're going to talk about why open enrollment is so important, not just for the coming year, but for our future.
Yeah, I'm really excited about today's conversation, Cindy. We had Eve and Christy on talking about last time, giving us the lens of let's pause and let's ponder. And today, looking forward to the conversation about the financial aspects of what exactly the pause and ponder and how that relates to certain selections that teammates might be making and thinking about the big picture here. So thank you
Yeah,
for joining.
I love that. The pause and ponder. I've never heard it put that way, but that's exactly what we need to do because for most of us, these benefits really make up the foundation for our financial stability. We're talking about things like life insurance and disability coverage and savings. These are huge, and it's a great advantage that we're offered these options through our employer. And we need to make sure that we're not just defaulting to whatever we had last year because we're busy and it's a lot to look at, but it's well worth it because it makes a big difference in how prepared we'll be going toward the rest of our careers and retirement after that.
Well, without further ado, let's get teammates prepared across all regions and let's maybe dive a little bit deeper into the well.
So, Cindy, this time of year, I think if you're a teammate that's been here for a long time, you've gone through several open enrollment seasons. And I know we tend to, as you just said, we tend to sort of get complacent and just kind of say, you know what, I'm just going to roll over what I did last year. And the last two particular years have been extremely busy. And I think teammates are feeling very fatigued in general. So, want to make sure that we really encourage teammates to take a moment to really look at what each of the locations are offering and what Atrium is offering teammates and why financially this is so important to be an active participant.
Yeah, it really is because these coverages and options and voluntary benefits that we have to choose from, they can really help us prepare for our family, provide what we need for our family, and keep us out of financial jeopardy that would impact us in our ability to save. So my call out to all teammates is that prepare yourself before open enrollment starts. October 19th is the first day. You want to sit down now with your spouse or partner and go over what you have and what you need. Most companies do open enrollment around the end of the year, so go ahead and get your materials from both employers if you're a couple and look at what the options are. And then think about what might have changed in this past year. So, did you get married? Did you have a baby, adopt a child? Do you have a dependent who is 26 now and not eligible for health insurance coverage? Has anybody changed jobs? Those are things that you want to take into account as you approach the decisions that you're going to be making. I know no matter what region we work in, we have resources online we can log into and review what we use as far as health insurance and prescriptions, review how much you spent, go through your spending history for copays and prescription payments and all those things and just see what you used and what you're likely to use now and in the future so that you can choose the appropriate level of coverage. If you ran into an issue and something that you had did not meet your needs, why was that? And is it likely to happen again? This will be a good opportunity to make a change that's going to be more in line with what you actually use. And then once you've got the big ones covered, the health and dental and vision and all that, review your voluntary benefit options. We have a lot of great opportunity with those, like prepaid legal. There are a lot of good things. If you've never done a trust or a will and you're thinking about that, that's a good benefit to take advantage of. Can really save you a lot of money there.
Cindy, as you're going through and talking about some of these really important points, something really stands out to me when you talk about preparing. And for teammates who have followed along with us and have listened to our conversations with you before, when it comes to budgeting, we kind of have, I keep having this thought in my mind about this fixed expenses versus, these unfixed expenses. And so
Right.
it's kind of the same thing, right? So with if you're going on the copay or HSA plan or the different plans that are available to each of our teammates across regions, these are considerations that, hey, what do I know that I'm going to pay for? Am I taking a medication that it's going to cost $5 for 12 months at $60? I need to make sure that I'm allocating money appropriately for that. Or am I expecting a big surgery? Or as you said, what are
Exactly.
some of these other life events that might throw in some variables? But I think if teammates are thinking of it that way, that's a great way to start to reframe this. And what do I know is going to happen, and how I put the money aside for it. And then, what about that emergency savings? What if something happens?
Exactly.
If I'm on a health savings plan, do I have enough in the bank to make sure that I can cover a sprained ankle or
Yeah. Yeah. Yeah, exactly. Because we don't know about that, and especially like dental coverage. If there's something that you need to do, you might want to plan ahead for that because that can be really expensive. So you want to make sure that you're using these benefits to your own best advantage. And I'll admit something here. Years ago, when I was first offered a high deductible health plan with an HSA, I calculated what I thought I would need to spend from my HSA for that coming year. And that's what I funded. That is the total wrong way to do it. And now I know better. So I want to make sure everybody else does too. The HSA is really designed for the future, not just this coming year, although it's definitely good for that. But we want to see it more in line with our retirement savings plan in that it's an investment vehicle and it's something that's going to help us in retirement because we know we're going to have medical expenses then. We're going to have to cover them and pay for them some way. So start to think of your HSA big picture. If you're not as familiar with how an HSA works, I want to just call out some of the highlights. And the biggest one is that it has a triple tax advantage. You might hear that on TV or read about that. I always call out the triple tax advantage. What the heck does that mean? It means that we save into the HSA through pre-tax deductions from our paycheck. So we're not paying tax on that money this year. Comes out, it's not counted. The contributions that we put in the HSA, they grow tax-free. So when you're able to invest your balance into the different investment options, the threshold for you may be $1,000, but look on your resources and make sure that you're moving money into the investment options so that it's growing. Take advantage of that tax-free growth. Then the third tax advantage is that when you use the money to pay for qualified medical expenses, you're not taxed on it. So you're never taxed on this money. And the IRS very rarely lets that happen. Got to make sure that we're using it. When I say qualified medical expenses, that includes premiums, deductibles, copays when you're in retirement. That could be huge. Then, once you turn 65, you can actually use this money that you've saved for anything. It doesn't have to be a qualified medical expense anymore. It's just that if it's not, when you take the money out, it's taxed as income. So not taxed if you use it for qualified medical expenses. You can still spend it. It's just taxed if you use it for something else. You've still saved it. And you are likely to be in a lower tax bracket when you don't have a full-time job anymore. So there's no downside to it. None whatsoever.
So what I hear you saying is if I sign up for a health savings account plan or a plan with a health savings account available, I have an additional savings account than what I may have with my bank or with my retirement fund. So this
Absolutely.
is, and it's tax free, like you said, unless you use it for non-medical expenses. So that's pretty exciting and a pretty compelling way to think of it. Like that makes me
Yes.
want to go sign up for an HSA plan.
Right. And when the light bulb went off over my head, and I realized, hold on, this is not just how many times do I go to the doctor next year. This is a big deal. We've all got to take the best advantage of it, like I said earlier. And it works very similarly to our retirement savings plans in that the IRS sets limits for how much we're allowed to save because, like I said, they're not going to let us get away with taxes on everything. So next year, an employee who's covering only themselves will be able to save $3,650. If a teammate has family coverage, they can save $7,300 for the calendar year. Now, these limits include any kind of employer money. So, for the Charlotte region, if you get a live well incentive or if there's another way that you get employer money into your HSA, factor that in too, because it's a total of our contributions and any employer money. Take these totals, divide them by 26 pay periods, and then decide how much you want to contribute to keep your cash flow even.
So two questions about that, Cindy. So the 3650 for an individual or 7300 for a family, that's what you can contribute in 2022 on top of what you already may have in that account, right?
Yes, right. That's new money going in during the year.
And that can be done through payroll deductions, but if you have some other money that you happen to come to that you wanted to put in there, you can also contribute that way, can't you?
You can in the HSA, yeah.
And then awesome. So the second question about that is when you're dividing by the pay periods, just want to make sure we talk about this. Like you said, the 3650 or 7300 includes any money that goes in there. So
Right,
what
it's
you put out
everything.
of your pay right, your paycheck, what you might put in if you get an inheritance or something, or whatever you earn from your employer. And what
Right.
happens if you go over?
Well, then the IRS doesn't like that. You have to take it out.
They'll
They won't
tax
let
you,
you.
won't they?
Yeah, they'll tax you. Yep. So
Okay.
that goes back. I think I said this one time in an earlier podcast. Whenever you have questions about these things, always ask yourself, what would the IRS do? And the answer is tax you. And that's what happens if you go over their limits. They don't like it.
We're laughing, but I'm sure that no one else is. But we all know that's true.
Yeah.
But so I think that's a very important point. Thinking about the health savings account, if that's an option that you have and you select, and that's something that fits your need and your circumstances after you've done your pause, ponder, and prepare, it can potentially serve as that retirement vehicle. But there are a lot of other retirement plans that are worth considering and should be considered as we go into open enrollment too, right, Cindy?
Absolutely. So we want to make those a priority too. I mentioned, earlier that the IRS sets limits each year for the amount that we're allowed to save. One of the many irritating things about them is that they wait forever to tell us what the limits are. So we don't know that as of today. They normally make an announcement in October. We do expect limits to go up a little bit for 401ks and 403bs. They, usually go up by $500 or $1,000. So wouldn't be surprised if we saw that happen. They just haven't told us yet. Now, one thing I want to call out as we're talking about this is how important it is when it comes to saving and your deductions, how important it is to do things in the most sensical order, the order that helps you the most. And that order is your 401k or your 403b. So you want to start saving up to the normal limit, which this year is 19,500. We'll see if it goes up, but save up to that limit first. You want to get your employer contributions, your match money, all that. Now in this case, match or employer contributions don't count toward that limit. So we can save 19.5 or whatever they declare for next year. Once you have done that, if you are going to be 50 next year, or if you already are 50, you can then do what's called a catch-up contribution. Now, it's important that you do it in this order because you don't need to catch up anything if you don't first save up to the regular limit. Do the regular limit first, then do your catch-up contributions. Once you've covered that, flip to your HSA and max that out too. Be sure that when you reach the threshold, you invest that money. And if you are still in a financial situation to save more, go back to your 401k, keep on going, 403b, keep on going. Now, there are other opportunities specific to the different regions. I'm going to specifically call out in the Charlotte region our Advantage plan. Our Advantage plan is extra. Once you've done 401k, you've gotten your match money, you've done catch-up contributions, you've fully funded your HSA, then you would turn to Advantage. Advantage contributions are not matched. There is no reason to save in that plan unless you just have so much money that you have the ability to do so. It's helping you with saving for retirement, but it's not being matched. Don't forgo the match to just save in Advantage. I see people do that sometimes, and I think it's just a misunderstanding. So 401k, 403b, catch up HSA, then any extra plans.
Okay, Cindy, I have a question about the catch up if you're 50 or older.
Okay.
And this is probably a silly question, but is it a one-time catch up when you turn 50, or if you have come into the plan and you're over 50, or is it you get a catch up every year after 50?
That's a great question. You get to do it every year once you hit age 50, or the calendar year that you're going to be age 50. And the reason is that the IRS recognizes that it's really hard to save a lot of money when we're first starting out. So you're establishing yourself, you're trying to buy a home, you've got car payments, student loan debt. It's very hard to save or to max out your savings when you're juggling all those expenses. The thinking is that later in life, by the time you hit 50, you may have more income and you may have the ability to save more. So they give us this opportunity from age 50 through the time we retire and start spending the money to save extra. So right now it's $6,500 extra, may go up a little bit next year, but just lets us do that if we're fortunate enough to be able to.
Wow, that's pretty awesome. And that actually leads into my second question. Just clarification. So what you're talking about with the 401, starting with the 401k, 403b, going to the catch-up HSA, and then the Advantage, like you're talking best case scenario. So
Right,
each of our teammates has to balance their own personal budget.
right.
And they can't, we don't want anyone, not having anything left in their paycheck because they've put it all into the retirement
Right,
vehicles.
right. It's definitely a balance. We have to live now too. So what's reasonable for you and your family? I think the thing that I most want to call attention to here is that you want to make sure you're getting your match and your employer contributions and you're not foregoing that because you're choosing to save in a different order.
Awesome. Thank you for that clarification. As we continue through our financial reasons to engage in open enrollment this year, what else should teammates be looking at? I know we've talked. What other voluntary benefits should we be considering and looking at?
Well, income protection is huge. So in insurance, there's, a fine line there between enough coverage and too much coverage. So you definitely want to talk to your spouse or partner about this and determine what your family's needs would be. God forbid something should happen to one of you. What you want to provide, you definitely want your family to be able to stay in their home, and live according to the lifestyle they're accustomed. But you don't necessarily need to make it as if they've won the lottery, right? There's a reasonable amount. So there's a website called lifehappens.org that has a calculator. You can plug some numbers in and help you determine the appropriate amount of coverage for your family. Um, I think it's easy to say, well, I would want them to have this. I would want all the kids' college to be paid for, so on and so forth. There are smarter ways to do that. So, for example, if you have children, maybe you want to have enough coverage to fund a 529 plan. So in the case of young children, they've got years to let that money grow and accumulate. Do that instead of buying enough coverage to provide $100,000 for them to go to college, right? It's still accomplishing the same thing, but you're using the gift of time to let the investments grow. So go through your needs, think about the smartest way to approach them. Go to lifehappens.org and get a good idea of what you really need to pay for. You absolutely want to review your disability coverage as well, especially if you are the sole wage earner in your family. Got to make sure you keep that train on the tracks if you have an illness or injury. So be sure that you guys talk through that in your home and understand what would happen and how much you would be bringing in. I've used auto and home and personal insurance benefits through our options here, and they're very reasonable and easy. So check on all of those.
There are a lot of good resources, and sort of beginning with the end in mind, thinking about, these are kind of our hard conversations to have with yourself, much less with your spouse and the rest of your family when you think about life insurance and disability. But, at the end of the day, the train's going to keep moving no matter what. And,
Right.
you've got to start thinking about it and finding ways to be prepared. So those are great resources that teammates can tap into.
Absolutely. Yeah, it's very important. And this is what I was talking about at the beginning of our conversation about making choices that won't derail your future. Be sure you're properly covered for any kind of event life throws at you so that it does not change your preparedness for the rest of your career and your retirement. And then, also one thing I want to mention is always, always, always review your beneficiaries. Even if you are 100% certain you've named them, look at them anyway. Just double check for me, make me feel good about it.
That's very important. It's a good reminder every year that we should check because things change and we don't think about who we wrote down at some point in the past to get the money if there was an issue. So it's you don't want to be, well, you wouldn't be surprised, I guess, if you're getting the life insurance paid out, but you don't want your loved ones to be surprised at
Right.
who gets what.
Definitely. Right. And also, you want to make that process as easy as possible for someone who's having to deal with such a horrible thing. So make sure the addresses are correct. Make sure that all the information that is required to make it official is populated. If their birth dates, make sure they're right. Their social security numbers. Don't make them go through any sort of red tape because you failed to review it.
That's a great reminder.
And I'd say if you're gonna take the time to invest in all of the accounts in some way, shape, form, or fashion that we just got through talking about, don't not go to the finish line, and make sure that you're covered and the beneficiaries are correct, and make sure that everything's as easy as possible in the event that life circumstance happens.
Yep, absolutely.
Cindy, this has been so helpful and great. I hope our teammates have enjoyed listening and are able to go into open enrollment feeling confident in how to work through their elections. Thank you for this.
You're very welcome. I'm so glad to have the opportunity to talk about this.
Really appreciate the perspective, Cindy. As usual here at the Well, we dove in a little bit. There's a lot to think about, a lot to ponder as teammates go through this open enrollment season. Jen, let's try and make it a little bit easy on teammates and, quite frankly, me. What exactly did we learn today?
Happy to. We learned so much. Open enrollment runs October 19th through November 2nd. We're going to say that. We've said that a lot. We're going to continue to say that. Don't miss that deadline. As discussed in our previous podcast, now is the time to pause and ponder. Ponder what your medical needs are for you and or your family for 2022, your planned expenses, as well as make sure you put money away for an emergency or a rainy day. Remember, your health savings account has a triple tax advantage and is a great way to save for medical expenses now or in the future. The contributions for 2022 have increased, so double check those numbers before you go in and just consider those contributions. Check out all the other wonderful voluntary benefits that are offered to you. Big, huge takeaway, review those beneficiaries. And then, Seth, what's our final thing that we've learned? Anything else?
Yeah, there's a lot of open enrollment resources teammates are probably getting a lot more comfortable with at this point. You've gotten the mailer that's probably arrived at your home, and each of us has access to the benefits page, the 2022 benefits page on the teammate site. For those that are in our Wake Forest, Winston region, there's the intranet where you can get access to additional information to help guide your decisions through open enrollment.
Our next podcast will be airing on October 21st, and we will be reposting our breast health pod from 2020. October is Breast Cancer Awareness Month. We do want to make sure that we touch on that. It's a great podcast, so make sure you tune in for that one.
Yeah, and don't forget to visit the 2022 benefits page on the teammate site, or for Wake, visit the intranet for additional information. And as always, please feel free to visit the LiveWell website for more info on managing stress, connecting with a LiveWell health coach, and additional resources to help you along your well-being journey.
Our resources are listed at the end of the show, and we'll add links to the programs discussed today in the comments on our Streams channel.
Looking for more things Live Well? Not following our Streams channel yet? Search The Well on Streams in Office 365 or find us on the Live Well website to access all our content.
Thanks for listening to The Well today,
Stay safe.
and live well.